Microsoft 365 Personal, $69.99 a year, now $99.99. Slack's Business Plus plan, $12.50 a seat, now $15. Adobe's All Apps plan, $59.99 a month, now $69.99, under a new name nobody asked for. 3 real companies, 3 real receipts, all inside the last 2 years, and every one of them points to the same 2 letters, AI. Here's the twist. None of these got better software. They got a GPU bill, and they passed it straight to you. Here's where that money is actually going, why it's happening to almost every app you use, and the 3 different ways companies are making you pay for it. One of them is probably already hiding in your own bill right now. Your invoice didn't get smarter, it got itemized. Start with Microsoft because it's the cleanest case study there is. October 1st, 2025, Microsoft 365 Personal jumps from $69.99 to $99.99 a year, 43%. And Copilot gets folded into every paid plan, not an option. If you are a new customer, you cannot buy the old version without it. And this wasn't the first time Microsoft tried the number. 9 months earlier, across 6 countries in Asia Pacific, the same company quietly ran price hikes of 29 to 45% tied to Copilot before rolling it out everywhere else. Existing customers back home got grandfathered onto a classic price with no AI. New customers don't get that choice. Slack did the business version of this. Its Business Plus plan went from $12.50 to $15 a seat, Slack's own words, to reflect the significant value added through new advanced AI capabilities. And the cheaper standalone AI add-on that used to exist on its own for about $10 a seat killed. After August 2025, if you had it, your only option at renewal was the whole new pricier tier. Some outlets are already calling this the AI tax. You didn't buy Copilot. Copilot bought itself out of your renewal. Not every company raises the sticker price. Some just put a meter on it instead. GitHub Copilot CET price didn't move. What changed this past June is how what you actually use gets billed. GitHub's own words. As of June 1st, all Copilot plans bill based on GitHub AI credits consumed. Chat, code review, agent mode. All metered now against real token usage, not a flat monthly number. Notion did something blunter. The cheap standalone AI add-on got killed. Want the real AI features, the agent, meeting notes, enterprise search, you now need the pricier business seat. And even there, a new custom agents layer charges $10 per 1,000 credits on top, no rollover. HubSpot runs the same idea on its customer service side. Its AI support agent comes with a monthly credit allowance. 3,000 credits on the mid-tier plan, and once you burn through them, it's $10 for another 1,000. Useful until the month you actually need it most is the month you run out. Here's the honest counter though. Zoom didn't do either of these. Core AI Companion stayed free on every paid plan. They're selling the extra features as a new $10 upsell instead, not clawing money back from people who never asked for it. It's not a subscription anymore. Some of these are a subscription with a fuel gauge, and some companies just didn't put one in. So why is this happening to basically every software company at once? Because the oldest rule in SaaS just broke. For 20 years, the marginal cost of one more customer using your software was close to zero. It's just bytes on a server. That's the entire reason software companies ran 80-90% gross margins. AI breaks that. Every single query burns real metered GPU time. And 2 independent 2026 reports from Bessemer, Venture Partners, and Iconic land on almost the same number from different directions. AI native products run 50 to 60% gross margins, not 90, 50 to 60. Iconic went further and broke down where an AI product's money actually goes as it scales. Talent, the engineers, used to be the biggest line item, 32% of cost early on. By the time a product's at real scale, that's down to 26. Model inference took its place. 20% of cost pre-launch, 23% at scale, climbing, not falling the bigger you get. And the same iconic survey found the companies themselves know this is unstable. 37% say they plan to change their entire AI pricing model in the next 12 months. Not tweak it, change it. The single biggest reason they gave: their own customers demanding pricing that actually matches usage instead of a flat number nobody trusts anymore. For 20 years, the marginal customer was free. AI just started billing them. Here's the bill. The companies raising your price are actually staring at, because this part isn't spin. OpenAI's own first quarter of 2026, $5.7 billion in revenue, $3.7 billion burned in cash in that same quarter. Its own internal projection, reported by The Information, puts full year 2026 losses at $14 billion. And that figure doesn't even include stock-based comp. So the real number is almost certainly higher. The same internal documents project OpenAI spending $200 billion between now and the end of the decade, 60 to 80% of it on training and running the models. That's the actual size of the bill everyone's price hikes are chasing. Anthropic tells a different version of the same story. In January 2026, with revenue exploding, Anthropic quietly cut its own profit forecast from 50% gross margin down to about 40%, because running the models on rented cloud compute cost more than they'd planned for. Not a slow quarter, a good one that still cost more than expected. By April, Anthropic's revenue had passed $30 billion a year. By its second quarter, it was on track for its first ever operating profit. Two companies, same problem, very different endings so far. So some companies are trying something more honest, if riskier. Instead of raising your price, they're charging for what the AI actually does. Salesforce's Agent Force launched at $2 per conversation. Whether the bot solved your problem or not, reportedly fewer than 1 in 10 customers who piloted it ever scaled it up. So Salesforce added a second model, flex credits, pay by the action, about 10 cents a task. Today it runs 3 different pricing models on the same product at the same time. Even Salesforce hasn't fully figured this out. Intercom's Finn took the cleaner bet, 99 cents only when it actually resolves your issue. No seat fee at all. Zendesk landed somewhere in between, a handful of free AI resolutions bundled into every plan since May 2026. Then automatic, uncapped overage billing on top once you're past them. And this June, Salesforce reportedly agreed to buy Intercom outright for around $3.6 billion. The AI didn't just get a job, it got a piece rate. And the piece rate just bought the company that invented it. So here's the actual audit on your own subscriptions right now. Open your bank statement. For every tool with an AI feature, ask which of the 3 buckets it's in. Did the base price just go up? Whether you use the AI or not, like Microsoft. Is there a credit balance quietly draining somewhere you're not tracking, like GitHub or Notion? Or does it charge you per action so the price scales with how much you actually use it, like Agent Force or Finn? Each one behaves differently the more you lean on it. A flat hike is a hike either way. A credit meter punishes heavy use with a wall you hit mid-task. A per action charge means the more useful the AI gets for you, the more it costs. Which sounds obvious until you're the one surprised by the bill. Check your subscriptions like they're a utility bill now, because for a growing number of them, that's exactly what they are. Both sides of this are true at once. This isn't a scam. Inference genuinely, measurably costs real money, and a company burning $3.7 billion in a quarter isn't lying about that part. What's dishonest is the part nobody announces. Quietly folding a meter into something you were told was a flat fee subscription without ever using that word. If inference keeps getting cheaper, and it has historically, though the pace is slowing, Some of this pressure eases on its own. When it does, we'll show you those receipts too. The subscription economy ran on you not reading the fine print. The AI economy runs on your usage. It's just better at hiding which one you're actually in. Your software didn't get worse. It got a GPU bill, and you're the line item. Next time, the $200 a month employee. What an AI coding assistant actually costs a company, and whether it's really cheaper than the developer it's supposed to replace. If this saved you from one surprise renewal, subscribe. There's a new one of these every week.